I'll be showing you about Hertz Global Holdings stock. You can see the name here right now from Google. You can see HTZ is a symbol, 14.170 US dollars for one stock. I can buy it's 2.01 billion. It's a billion size firm, it's a big size firm. It isn't paying any dividend. Any firm that is paying dividend, that means they're financially very, very strong. It's a positive sign because that means that they, after paying their loans, liabilities, creditors, they still have extra money. That extra money pays to shareholders as dividend. This firm is not paying any dividend. There could be many reasons. Maybe they are not financially strong, or maybe they are financially strong, but they choose to pay their extra money. Instead of paying to shareholders, they choose to reinvest in their own firm to further expand. So there are many aspects. So please look at dividend yield as well. It's founded in 1918, and um, what I want to show you one more thing is that just copy this exactly from Google, and I'll paste it here. You can check out the reviews, what employees have to say about this in Indeed, and you can see we have 5,000 reviews, 3.3 star. Please read through the pros and cons yourself. Check out the salaries they're paying, the photos, the jobs listed, the question asks. Check this firm in Classroom as well, which is a brilliant website for reviews of employees as well. And I'll click there, and I can see it's 4.6, like 4,600 reviews and 2.7 star. Check out the jobs listed, the salaries they're paying, the interview questions, the benefits they're giving, and the photos, and read through the pros and cons yourself. Check it in Just Your Patent, see what patents they have, and I'll paste it here exactly. Click enter, and nothing appears, so it means it might not have any patents, but let's have a look. I can't see any patents from this firm. So any firm that has patents, that means they're very strong because they're innovating and it has a moat. So it's hard to beat a firm that has patent, but this firm doesn't have any patent, I guess. I can't see any patent from this firm. Let's go to just Yahoo Finance and see what the key executives are getting as salaries, which is very important for us to know as well. And I'll just click on the Nasdaq symbol HTZ and go to profile. I can see sector industry employees. I can see that there are five key executives, but four salaries have been shown. One, it says not applicable. You need to find out why it's not applicable, because the more transparency in salaries, the more trust we're able to build. So that's important for us to know. Let's go to macro trend and check out the ratios. Click price ratio, price book ratio, and type in this thing. If price book ratio is less than 1, that means stock is cheap, it's a discount, it's a sale. If it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it gets. Right now I can see that it has 1.18. It is 1.18 times more expensive to buy the stock right now. So I can see in 2019 March it's 1.45, which means people paid $17 to buy something that was $11 worth. So it was 1.45 times more expensive. Right now it's 1.18 times more expensive. In 2015 December, people who bought that time, they bought it 14 times or nearly 15 times more expensive. They paid $71 to buy something that was $4 worth. So let's go to other ratios, and I want to have a look at current ratio. If current ratio is less than 1, that means stock is risky because liabilities are more than assets. If current ratio is 1.5 or more than that, that means stock is safe. It has a good margin of safety. So we are looking for 1.5 or more than that. Let's have a look. Okay, right now I can see that right now I can see it's 1.33, which means that it's less than 1.5. I'm looking at 1.5 for it to be safe. So I can see there are fluctuations. It's up and down, but there's no consistency as such. So I would say it's a risky stock because there are fluctuations, and it's less than 1.5. So let's go to debt equity ratio. I'm looking for zero point 0.5 or less than that. This ratio will tell me if the company is mainly operating on debt or equity. So zero point 0.5 or less than that is brilliant for me. Okay, I'm looking for 8% or no, I'm looking for zero point 0.5 or less than that. It's a lot more than zero point 0.5. It's a very dangerous stock. It's if you just have a look, long-term debt is 18 times more than equity. Is a very dangerous stock. It's operating a lot on debt. This is not a good sign. Let's look at the previous trend. I'm looking for zero point 0.5 or less than that for it to be brilliant. And only for a while in 2016 March, it's less than zero point 0.5, but then it has taken a lot of debt, so consistently it has been a very dangerous stock. Let's look at return on equity. I'm looking for 8% or more than that for it to be brilliant. Let's have a look. So I can see that the return is, it's a minus return, and I'm looking for 8% or more than that. It's a minus return, it's minus return, it's a positive return, but then there's a minus return. So there's no consistency. So I would just say that, it's not a good return it is giving.